Hello, everyone. Welcome to Talking Logistics, where we have conversations with thought leaders and newsmakers in the supply chain and logistics industry. And it's my pleasure today to welcome Tom Friedman to the program. Tom is an angel investor and the president of THF Consulting Group. And Tom is also my neighbor. And, over the time, we've had some great conversations about kind of the connections between supply chain and entrepreneurship and investing. And I thought, rather than just have these backyard conversations, why don't we bring the conversation online and invite, some of you that are joining us today into it as well. So, like I say every week, for those of you that are joining the program, part of our goal here at Talking Logistics is to really make this an interactive conversation. So as Tom and I are discussing this topic, if you've got any questions or comments for Tom, feel free to post them via the submit a question button. And I'll go ahead and keep an eye on them and try to weave them into the conversation as best I can. Also, a reminder, if you're logged in as a guest, you will have to register first in order to submit a question. So with that, Tom, thank you for joining me today.
Well, thank you for inviting me.
Before we kind of dive into the topic, one of the things that I always like to ask my guests is to kind of get a sense of how they got involved in supply chain and logistics. So if you can tell us a little bit about your career path, how you first got involved in supply chain and logistics, and how and why you got involved with angel investing, I think will be kind of an interesting way to kick this off.
Okay, all right. Well, it's not always a logical path in life, so I'll start with that. I've been involved with supply chain and systems since the late 80s. I launched a company called Retail Systems Alert Group, which was initially a advisory service with newsletters and published reports for the purpose of educating mostly IT executives, but also other C-level executives about the issues of systems and this was in the late 80s when everything was basically IBM and Big Iron. And one of the hurdles that I had to jump over was understanding what retail was. And so I took a deep dive into retail in 1989 and started off very fortunately working with Walmart. Walmart had subscribed to the newsletter Retail Systems Alert and brought me in to talk about what some of the issues were in database management, which was actually my technical background. And as we started talking, they told me that data resided in a lot of parts of their organization. And the most important department in their organization was supply chain and logistics. And I was very fortunate to talk to Mr. Sam one day in the hallway. And he told me that satellite technology and point of sale and so on only had one purpose, which was to drive logistics at Walmart, and he really didn't care about technology. He said if you could do without it, it would be much better. So starting with that relationship at Walmart and learning about their hub and spoke system and visiting many of their early warehouses, both in Arkansas and other parts of the South, I started to build my knowledge, started to exchange information not only with Walmart, but with Target and many of their competitors, because they were all interested in the role that data and systems would play in the future of logistics. So that was my entry point. Retail Systems Alert Group slowly grew as a company and became one of the leading, at that time, analysts for retail systems. And in 1995, we added something called the Retail Supply Chain Report, which started to look not only at systems, but the role that logistics could play in major retail organizations in all sectors, and not only discount, but supermarket and especially apparel, which was very dated. During that period, and I'll come to a kind of crescendo here, but during that period, I was very fortunate to be part of the quick response movement and did a lot of lecturing both for retailers and for systems companies and to logistics executives in the 3PL industry about what quick response meant, which started to evolve into something called CPFR. And I was actually an ex officio member of an organization called VIX, which was a retail CPG-oriented organization to improve standards, mostly data standards, but um, uh, CPFR is, it's always a collaborative planning, forecasting, management. We had lots of discussions about how terrible acronym that was. But the whole idea was to have retailers and their suppliers collaborate, and of course that's brought in a lot of logistics executives. And in 2001, actually a few days after 9/11, I launched an event called Supply Web Exchange. And the idea was to take the knowledge that the systems community had and the knowledge the logistics community had, and to put that on the web and see if we couldn't improve efficiencies in data exchange. So that's my background. How did I become an angel? I was very fortunate that in 2004, my company was bought out by some private equity guys here in Boston. And I was unfortunate in that private equity does not like entrepreneurs. So they asked me to leave and to become a consultant to the company, which I did. Not voluntarily at first, but afterwards I realized I really shouldn't play a role in the private equity world. But it gave me a deep insight into how the investment community views entrepreneurship in businesses. And over the period between 2004 and 2009, I was actually out of the business world. But following what was going on in the Silicon Valley and in Boston, which are really two active areas for venture capital and the angel community. And so I joined with a few venture capital firms to serve on boards and started to understand that that's really an industry that needs to invest hugely in companies, mostly early stage companies, but not beginners companies, more mature companies with larger potential. And as I got more involved in sitting on advisory boards, I realized how inefficient venture capital is. Venture capital, for those who are not familiar with it, is shooting for home runs. Basically, they like to invest $30 to $50 million and make $1 billion. So that wasn't for me because I wasn't in that league financially, and I didn't want to invest in a venture capital firm after I learned that they only hit a home run 1 out of 50 times. So I started to look at angel investment at the insistence of one of my venture capital friends, and found out that that's a different formula. It's a formula that is looking for singles and basically to move the runners along. So as opposed to a $50 million investment, angel investors will invest personally about 200 well, not personally, actually, as a group, will invest 250,000 to 750,000 in startup ventures. Some of the ventures are just basically the back of a napkin. Others are coming out of labs at major universities, and still others are coming out of corporate environments where perhaps a great idea just doesn't have a role. And this is quite common in the pharmaceutical industry. There's now a movement in the pharmaceutical industry to offload smaller projects that don't have immediate potential. So the group that I'm a member of in Boston, because angels tend to group together because we like to aggregate our investments so that we can make a larger investment. It's called Launchpad Venture Group. It consists of about 120 members. We come from all different backgrounds. I'm the retail supply chain guy in the group. If we have any potential investments, I come in, I look at them. I use my resources and my connections to do some preliminary reporting, and then I go back to the larger group and I'll advise them on whether there's a supply chain or an IT potential investment here. Now, along the road here, and this is how Adrian and I started talking, many of the ideas that have come to the Launchpad group have been related to either physical products or related to supply chain issues, or related to both. And ironically, 1 out of about 20 of our investments deals with what I would call the material world. 19 out of 20 deal with the ethereal world. And the reason for that is our group, and especially the managing partners in our group, feel as if um, ethereal investments like Web 2.0 and software have a greater success at a lower investment level. They think that physical products, because of manufacturing and supply chain, are out of bounds. And also, we're not able to evaluate market risk when it comes to a physical product. There's no angel formula for that. There are thousands of angel formulas for Web 2.0, including just throwing a dart at a dartboard, which for some reason is more acceptable in the ethereal world than it is in the material world. So that's my background. I'm proud to say that I think I've crossed the chasm between IT, supply chain, and entrepreneurship. So I look forward to further discussion during this show.
Yeah, Tom, great intro and background. You actually, considering all your history with retail, it must be interesting to see kind of all the developments that have taken place, in the industry, particularly now with the web and e-commerce and everything else. And you just touched upon, at the end there, what was going to be my next question, but maybe you can elaborate a little bit more. Last year, I wrote a blog posting that was really inspired by a question that you had asked, some of your, angel investing colleagues. I'm just going to read it here. I can't remember if you posted this in a discussion forum or if you asked this question live at one of your meetings. But you asked, why do angel investors? And I would add, Yep. So why do angel investors and to some extent I would say venture capitalists turn up their noses at real down to earth physical product companies and instead chase ethereal web and process flow services businesses? So you kind of touched upon that a little bit, but maybe you can elaborate a little bit more on that and then more specifically, why are you kind of trying to change the tide, kind of push back towards that way of thinking?
Right. Well, there are a few reasons. Number one, the web is unregulated. So an investment in the web rarely runs into any government rules and regs. And angels, of course, would consider those high risk versus a material world where we have product liability issues. So I think the highest level, that's one of the concerns. In fact, the biomedical devices, you have the FDA regulating that device from the time it's invented to the time it hits the market and then further on. So that's at the highest level. But at the more practical level, it's really the cost structure that scares angels away. We're making relatively small investments in hypothetical companies, or I should say hypothetical ideas. The companies are very real, but it's usually one or two very bright young guys who are trying to solve a problem. Now, in the web world, there's no worry about the product delivery. There's very little worry about the marketing of it. For better or worse, that's just how angels view it. So if you're going to hit a single, all you need to do is back a developer, and that developer comes up with a product and delivers this ethereal product on the web. It may be an app on the iStore or to something much more sophisticated like a telemedicine web system. But on the other hand, on the material side, we're completely ignorant in the angel community about most of the new developments that are taking place in the maker world. I mean, everybody's heard about 3D printing. There's a whole new movement in the, I'll call the creative CNC world. So there are a lot of basic manufacturing tools that in the past were beyond the means of a small company, but now they're available. They're available here in Boston in a maker space called Artisans Asylum, where you can go in, you can do all sorts of early product development, but you can do some very simple manufacturing. with not only CNC machines, but some basic printed circuit board systems. So there, I would say it's mostly ignorance of what the cost structure is, not ignorance of what the process is. Everybody in the angel world is very excited about 3D printing. In fact, some of the largest investments have been in new portable 3D printing systems. But the biggest worry is we don't understand the cost. And then the other issue which has arisen time and time again is the fact that manufacturing occurs outside the United States. And we're very good at predicting where risk is. And manufacturing outside the United States for an American angel is a scary thing because you have all of these scenarios of disasters at a Chinese plant, or human rights issues at a Chinese plant, or a revolution in Vietnam, or the fact that there could be a monsoon in India. And these are high risks. And since manufacturing is not occurring in the United States, for a lot of the products that we look at, which are mostly biomedical devices and consumer products, angels are kind of backing away. Now, here's the dilemma. Some of our biggest opportunities in this country are in manufacturing. And it's simple manufacturing, a simple toy. It could be a simple biomedical device, a new kind of needle for a hypodermic device. It could be a printed circuit board for a new sort of baby monitor. All of this is being manufactured outside the United States, but it's going to start moving back. I think manufacturing costs are going to come down. And that's really where Adrian and I have been kind of focusing is, if manufacturing costs come down, then what's the next biggest cost? And the next major cost is supply chain, both logistics and storage. And that's an area that angels know nothing about. There are very few people in the angel community with any supply chain background, because we all tended to be owners of small businesses that were sold. We have a few billionaires in our group, but I think they made most of their money by manipulating stocks on Wall Street. But the real core of the angel community are independent entrepreneurs who had companies between, say, 10 and $50 million. And they were mostly historically in the IT business. So we're much more comfortable at costing out an IT project than costing out a materials project. Let me give you an example. There's a great company here in Boston founded by 3 MIT grads. I met them the day before they graduated 2 years ago. And they have a baby product, which is a baby monitor. And their thought was they could do all the manufacturing in the United States. However, if they're successful, they can't handle the volume. So they calculated all their landed costs in the United States, and they said, well, it's about 35% or 40% of our costs, but we can manage that. We can price our product correctly. However, if they get large volume, they have to go to China. And these guys are mechanical engineers, fantastic guys. They know nothing about supply chain. They know nothing about the reverse logistics issue associated with returns. They know nothing about the level of returns. So you have a group that would like to manufacture in the United States to keep their costs down, and they calculated those costs. But as soon as they go outside the United States, they really don't have great answers. In fact, what I hear time and time again from young companies like this is, oh, we went with a consultant to China and visited a factory. That's the sum total of their supply chain experience internationally. So we see these guys who are brilliant at designing product, but not brilliant at moving it. And the move it problem is the one that I want to attack as an angel. I think we need to have people in the supply chain industry doing a few things. One, I think joining some of our groups. You can do that as an ex officio member. You don't have to invest. In fact, about 20% of our membership are services companies, mostly lawyers and accountants, people who have a very good perspective on the process of making a company. But we really need more people in the angel community with expertise in supply chain. We're seeing more and more of these baby devices coming before us, or biomedical devices. We're seeing more and more connected devices. When I say connected, these are devices like the one that Nike makes that monitors your biometrics while you're exercising. But they have to be manufactured somewhere. So Nike manufactures them in China, ships them over here, and they probably can do that because they have the size and breadth of company, but they don't have the knowledge to do that in the United States or the will to keep the costs down. So if you're a small company, you don't have a choice but to go to a venture capital group, that would give you a significant amount of money to cover all the risks. So that's kind of my answer to the why angels chase electrons, or why they like the ethereal world versus the material world. Let me add one other thing here, and that is that when I was in the supply chain world as an analyst, there was a lot of discussion about making the supply chain much more efficient. But it was always between companies that either design or made products that were in the billion-dollar range, and then very large logistics companies, either the shippers or 3PLs in the United States. And lo and behold, Amazon came along. And Amazon basically broke the model for delivering product from everywhere to everywhere. It used to be one-to-one or multiple to multiple, but they did everywhere to everywhere. And that was a huge development. Amazon's model, which is quite efficient, is too inefficient to help small entrepreneurial companies because it eats into their margin. And I think that's very telling. And I've thought a lot about this, and I think really the solution is an ironic one, which is I think that the supply chain community needs to start investing, just like angels do, in these small startups. There are hundreds of thousands of them. If you go to Kickstarter, which is a form of angel investing, it's called crowdsourcing, you'll see that there are companies of all sizes with physical products that are trying to meet the market's needs. They get as far as getting pre-sale orders, but they often fail to deliver to the marketplace. And it's either from a manufacturing perspective they can't do this, but more so from the supply chain perspective. So I think that Amazon, was kind of the tip of the iceberg in terms of how a startup can really change logistics. And I would like to see more change in the logistics community, especially from an investment standpoint. You can always do what we do, which is to throw a few dollars in and get some equity. Or another strategy would be to have a truly collaborative formula for smaller companies, maybe using a reverse logistics cycle to keep their costs down. And I think the third part is education. We always harp on that in the supply chain world because there are so many complexities. But if you're a recent grad from a tech school and you've invented a device, chances are, you may have taken one supply chain course, but chances are you didn't. So that's a kind of a longer answer to why angels chase electrons. So,
well, you touched upon a number of different topics there. A lot of them, some of them that I was looking at kind of dive in a little bit deeper, especially that last point you made. So I'm going to kind of cobble together a few of the thoughts and ideas that I had. So you talked about kind of so you obviously work with a lot of different companies, both as an investor and as a mentor, with these entrepreneurs and these opportunities that you get the opportunity to look at. You talked about from an angel perspective, kind of risk and the different types of risks that you look at in terms of why some of these physical products kind of a lower priority historically for angel investors. Can you share a little bit? You gave one example. Can you share a little bit about what are the most common challenges that you see with some of the entrepreneurs and young companies that you're looking at? some of the challenges they face, and what are the current options? I mean, you talked about, the need for 3PLs and perhaps others to, in this ecosystem that could potentially help. But what are their options today? In terms of,
ironically, if you're in the software world and you come up with a great app, you have lots of options to distribute your product. I mean, whether it's through the iStore or whether it's through Google. Google has an acquisition formula which says, if you have a good idea, we'll bring you on as a talent acquisition with some back-ended potential. So they bring you on, maybe give you $1 million up front for your product so that they own the license, and then they pay you a nice salary to work for them for 5 years, and with the potential that you'll reap some rewards. That just doesn't exist in the material world. In the material world, we license patents. And say if you're in the toy industry and you've invented a great toy, you might license it to Hasbro and get a 3% royalty if you're lucky. So, really, it's often very confounding. I think some of the opportunities really lie in the new flexible manufacturing environment that is evolving in this United States. And in the world, but more importantly in the United States, where we have a growing community of people we call makers. And makers are creating communities where they collaboratively buy, educate, and use new machinery, such as a 3D printer or a CNC machine to start, or machine shop tools, start making products, especially prototyping products, to prove whether they work or not. One of the ironies is that to make a tool die for a prototype product actually costs 10x what the product costs. So there are a lot of companies that get to the prototyping stage and don't have the funding to go beyond that. And when I say what the product costs, actually the manufacturing supply chain costs. So if you have a prototype, in fact, I'm involved with a company right now, we're going to prototype a product that will cost $69. It's going to cost us roughly $5,000 to prototype it. So one of the ways to get around that is for the prototyping industry to grow. And I think one of the industries that they could collaborate with, which is the supply chain industry, if we could get prototyping costs down and initial market testing of product and supply chain on the same page, I think we'd be moving in the right direction. I think if we all look around, we'll be amazed with how many young people we see not going into the software industry, but going into the material industry. We're in the midst of kind of what I call a reverse evolution here of thinking. The most exciting problems today really deal with the connected world. How do you connect the internet to a physical product? And so I think there might be some good information sharing here. I don't know if that answers your question entirely. I think part of this discussion exists because, we're in a quandary here. Washington, especially the Obama administration, is eager to see the manufacturing return to the United States, but it's really a larger ecosystem problem. It's not only going to require larger investment, but some of this reverse evolutionary thinking going back to what CPFR was and what quick response was. Even a company like Amazon, I think, is in a quandary about how to reduce their supply chain costs. And I think collaboration is really the only way to do it, and investment from members of the ecosystem.
Great points. There's a question here from James Coleman I'm going to put up. I can't read the whole thing, so let me see if I put it on the screen, if we can see the whole thing. You mentioned the maker movement. That's something we're passionate about. Any thoughts on the next big opportunity in the space?
I think the next big opportunity in the space is really integrating the maker movement. The maker, and when I say that, I think that there's a lack of communication in the maker movement. It's very much a local movement. Every city in the country now has a maker space. In Boston, we have one called Artisans Asylum, which is literally a aircraft hangar. They have a limited amount of space now, even though they filled up their their larger space because of the demand. And so I think one of the movements that I would like to see take place in the maker community is to integrate the maker community. So if you have a guy in Boston who's working on a project, he can access expertise at other maker communities, say in Omaha or in Portland, Oregon, to make the design process more efficient. And then I think the other efficiency that can arise from this is that these maker spaces do have manufacturing capabilities. Some of them are larger than others. Artisans Asylum could manufacture robots, while another maker community, say one in LA or San Francisco, could manufacture packaging. Um, so I think that if we can start integrating the maker community, we'll have some pretty significant, I'm not going to call them companies, I'm going to call them um, uh, co-opted or co-opetition, because the maker communities are a bit competitive with one another, but there could be huge co-opetition opportunities between the maker communities. This is where, you know, the 3PLs kind of sit down with the owners of these communities, and I say the owners are basically stakeholders, and find out what products they're working on and how much it'll actually cost to get to market in various volumes. You know, are they too heavy? Are they too light? You know, all the issues that, you know, large manufacturers deal with. This ecosystem, if it was connected, could act like a large manufacturer. I bet you if we sat down, and no academic has done this yet, but if we sat down and looked at the potential for prototyping, manufacturing, and of course design services within this maker community, it would be the equivalent of Procter & Gamble, IBM, and Johnson & Johnson put together. And I should add, in terms of pure intellectual power, the people that are in these maker communities, they're not interested in working at big companies. They're interested in making small successes. And that, as an angel, is why I'm focusing on them, because small successes in aggregate are exactly what large companies are.
Great, great. And James also asked another question, which I think is related, you know, to that. I'm just going to put it up here on the screen. Um, let's see. Do the crowdsourcing website give you a way to de-risk real-world as opposed to ethereal opportunities? So, I mean, you just talked about collaboration and
Yes.
integrating, you know, different, you know, maker communities. You know, crowdsourcing is kind of another type of collaboration kind of formula here.
Absolutely. Crowdsourcing is in its infancy. You know, at the current time, the SEC is still playing around with, you know, how crowdsourcing is going to work. I mean, one of the difficulties with angel investing is it's a very limited community. The resource level is never going to be what we hope, because to enter that community, you have to be an accredited investor, which means you have to, as an individual, make 250K a year um, pre-tax, or 300,000 a year with your spouse, or you have to have $1 million in an accredited bank. And so it's a limited community. It represents, I think, less than 1% of the American public in terms of entry into that community. You also, unfortunately, have to be vetted by angel groups, because if you have a criminal past or you don't have the skills and so on. So it's a hard community to get into. Now, that's why crowdfunding has such a large potential, because essentially those barriers are going to be broken down. The question right now is crowdsourcing going to be a new liability for American industry? Will we have scams in crowdfunding? Will we actually have enough money going to crowdfunding to make all of the great ideas that come out of maker spaces happen? Kickstarter's actually pulled back on many product categories because of litigation issues. So, for instance, you know, they're not in health and beauty aids. There's just too many issues related to that. So, and then a second answer in terms of crowdfunding, which I'm a big believer in, it's like all these gambling sites. Most of them are offshore, so there's no regulation. You know, there are crowdfunders in Israel, there are crowdfunders in Thailand. We don't know if these are scams or not. Essentially, with, crowdfunding, you put your credit card into a system, and you're pre-buying a product, or you're offering money to a debt instrument, and you don't know if you're going to get anything in return. So there's fairly high risk in that respect. But from the material world, the beauty of crowdfunding is that you can pre-sell your product. You can see if the market is going to adopt it. This is often, a 2 to 3 year period with most consumer products. And at the end of a 3 year period, many large companies will drop a product. If you're a startup, you can't wait 3 years. You need in 60 days, you need to know if you have a go, no go on a product. I mean, failure has to happen fast. And so crowdfunding can make that happen in two respects. One, if investors are interested in what you're doing, but your investors are also people who usually have a vanity interest in your product. So I hope that answers your question.
Yes, no, absolutely. Great, great points here. And James, thank you for your questions. Much appreciated. Just want to remind everyone, we're coming kind of towards the end of the program here. So if you've got some questions or comments for Tom, now's the time to post them. So, as a way to wrap up, we covered a lot of ground here. You really gave a great, overview of kind of the angel investor's perspective, kind of what some of the challenges that entrepreneurs and startups face from a supply chain logistics standpoint. You've given some great ideas in terms of some of the possibilities in terms of overcoming some of those challenges. So if you were to kind of boil the ocean down and say what are some of the things, the 2 or 3 things that need to happen, need to change to really help entrepreneurs and startups overcome kind of the supply chain logistics challenges they face to truly realize the maker economy that I know you're passionate about and others are passionate about in terms of realizing?
Yeah, I think first we need to have more intrusion into the entrepreneurship process, both through kind of the incubation community, which is a community I didn't talk about. Every city now has an incubator, either a Techstars incubator or a community or state-funded incubator. We need to have the logistics community involved with those enterprises. A lot of entrepreneurs are going to those enterprises to get mentoring and to become educated in areas that they're not expert in. Remember, if you're an inventor, your only knowledge is your invention. When you enter the entrepreneurship community, you need to collect all the business experience on the outside. This includes even folks who have MBAs. Until you've started a company, you don't know what you don't know. And then I would say, secondly, we need investment, and the investment may be human capital. In fact, that's the focus of many angels is human capital, sharing their expertise. But I think we also need some financial investment from the supply chain community. It may be a scholarship, one of these incubator communities. It may be a investment for equity in a company that looks like it could be, the next Hasbro. Remember, entrepreneurship exists in this country now to start new companies, and so you don't know who are going to be the winners or losers at this point. And then I think the third issue, which is an angel, I'm very passionate about, which is we really need to talk to the young people, and I'm talking about high school students, about the complexities of the supply chain before they start dreaming about some crazy iStore app. We need to convince the youth of America that the future of America is just not always an app. And of course, we all get excited when we hear about some young high school student that has built an app and sold it on the App Store, or in the case of Yahoo, they bought an app designed by a 17-year-old and gave them $30 million for it. But we need to start turning our kids' eyes towards the material world a little bit more and encouraging them to understand that the invention of a product or the licensing of the product is just a first step. Getting to the market, moving, it's a huge step. Storing, it's a huge step. Shelving, it's a huge step. And I think we're going to see more and more people getting involved with that discussion in the angel world because I'm pushing it.
Tom, that last point was great. I think I'm going to have to, when I listen to the replay, I'm going to have to take that snippet. I think you said the future of America is not an app. I think that kind of sums it up, pretty nicely there. And I think you already hit on some of these things, but maybe maybe just to go, maybe to emphasize a little bit more. So let's say I'm an entrepreneur. I've got this great idea for a product, and I'm listening to this episode either right now live or in the replay. What advice would you give to me in terms of or any entrepreneur that's listening in terms of what they need to do to succeed in the maker economy, and what kind of questions should they be asking themselves, or work should they be doing before they come and kind of, let's say, meet with you? And in terms of making sure that they've thought through perhaps some of the issues and opportunities beyond just the features and functions of the product that they have an idea for.
Right. I think they should look at the feature and functions of the entire supply chain first, because their invention's only as good as the delivery of that product. And that includes both looking at manufacturing and looking at shipping and transportation issues. Ultimately, if they have a material product, it's either going to end up on the shelves of a retail store, it's going to end up on Amazon, or it's going to end up on their own e-commerce site. And they're going to have to face the issues of supply chain. So I would like to see entrepreneurs flip the formula. And I have a new process. I call it the win-win marketplace for the maker economy. And it looks like this. At the top of the pyramid, we have shelve it. As we move down, we have move it. Below that, we have make it. And at the bottom, we have create it. So I've actually say that if you're an entrepreneur, your fourth priority should be creating it. Your first priority should be figuring out how to shelve it correctly. And until entrepreneurs are thinking about the reality of interacting with the customer or the buyer of their product, they are never going to be successful, and they're never going to make it through an entrepreneurship process with an angel group. However, if you do have a great idea, go to gust.com, GUST.com, and fill out the forms there and tick off Launchpad Venture Group, and we will see your proposal. That's the easiest way to get to our group. And I'll make sure that if you've gone through this process I've just talked about, that you'll get some attention. But it will always be an uphill battle, because the ethereal world, for some reason, is more predictable than the material world.
Great. And with that, Tom, we're out of time. But again, thank you very much for some great insights and food for thought there. I think this was a great topic of conversation. I'm sure that you and I will continue this conversation in our backyard sessions. And for those of you that joined today and or are watching this on demand, if you've got a question for Tom, down the road, visit talkinglogistics.com. Search for this episode and post a question for Tom there, and I'm sure he'll be happy to provide his thoughts down the road. So with that, Tom, again, thank you very much for joining us today.
Hey, my pleasure.
And thank you all joining today. Like I say, every week, mark your calendars and plan to join us, where we'll have great guests most weeks, like Tom, talking about great supply chain and logistics topics and trends. Other weeks, it'll just be me sharing my viewpoint on a particular topic. But certainly, again, thank you very much for joining, and look forward to seeing you in a future episode of Talking Logistics. Have a great day.